Okay, we are live. Good morning, good afternoon, good day. Depends on when you are watching this video and where you are in the world. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty, and our team provides residential, commercial for small businesses and nonprofits, and property management services. And coming soon, Lyonsview Academy, where we will be doing pre-licensing and continuing education courses. We also do credit counseling and home distress solutions if you find yourself in that position. But really, Lyonsview Realty, we launched Financial Fridays to help you stay current on the trends that impact your bottom line. So, our goal is to provide you with resources, information, and tips to assist you in making the best financial decisions. And our commitment is really to maximize your wealth building power now and in the future. So stay tuned. Welcome, welcome, welcome. Our guests are here as a resource to you. Feel free to ask any questions that you might have. You can just pop it down in the comment section. And I want to say I met today's guest. Wow, it's only been a few weeks. It's been a few weeks, but that's all good. We've been on, it's June, it's home ownership month, right? So we've talked about debt, we've talked about savings, we've talked about getting your credit together. And the next step in the home ownership process is getting your loan. So our next guest is Miss Kescha Vaughn from Meridian Bank. And she's going to share a little bit about herself. And then we're going to jump into what you need to do to get ready to get your loan. Kescha, how
Yeah.
are you today?
Good day, everybody. Thank you so much, Miss Clara, for allowing me to speak on your live stream, Financial Fridays. I love it, love it, love it. So let me just give a little bit background about myself. My name is Kescha Vaughn. I am Senior Loan Officer with Meridian Bank. I've actually been in this business well over 25 years. I'm going to tell you my age. I actually started off as a real estate agent back in 1990. And so that was my feel of getting into the real estate world. But my heart's desire kept steering me into the financial side of real estate. And it was telling me that I need to be able to show people how to achieve the American dream of home ownership. Like educate, empower, encourage people like you can build wealth through real estate. And so I started that journey in 1995 actually, and been running with it ever since. My experience have been with a number of my own ownership as far as mortgage companies. I work for a lot of the major banks. I won't mention any names, but I've had my share of experiences from loan origination, processing, underwriting, and just getting people the whole gamut in regards to how to get approved for a loan. So I'm excited to be here tonight and today, and hopefully that I can answer people's questions and make them feel a little bit comfortable by taking a leap. And you can do it. You know, it's possible. It's just about having the information that you need and get it
That
done.
is that is so true. I so appreciate you coming on today. And we have something in common. I actually started in real estate in 96. Yeah.
Oh, okay.
Yeah, 96 as
Yes.
well. So we're twins on the birthdays.
Right.
And I think you said something really important, which is you can do this. It
Yes.
is possible
Yes.
to do the home buying process with a little bit of information. So we're
Yes.
gonna kind of jump into that. So how far in advance should folks really start the process, of shopping for a mortgage, before they go to the home buying process?
Right. In today's market, basically, probably within 60 to 90 days. I mean, transactions normally happen within 30 to 45 days, but just in case there are some challenges that you may have regarding credit or income, and you have questions, you're not quite prepared, or savings, things of that nature, you want to probably give yourself a 90-day window so that we can get you prepared to go out and start buying a house. So that's pretty much how you should go about it.
Yeah. So 30 to 60 days before they start looking, or 30 to 90 days before
Well,
they
60 to 90 days.
60 to
So we
90.
start the process 60 to 90 days because once we run credit, a credit report generally lasts up to 120 days.
Okay.
Okay. So if you're talking 90 days, if
Mhm.
there's some issues with credit, we want to be able to address it so that we can make some maneuvering with the credit and suggestions about maybe increasing your credit score so you'll meet the requirements. It
Right.
depends upon when you're trying to move as well and how long will it take you to find a house. So it all depends on how the market is, but I think 90 days is a good number to whether the market is moving fast or whether the market is moving a little slow.
Yeah. Thanks for saying that, because sometimes people, they have a 30-day window. They have to be out of their place in 30 days and they want to buy stuff. And I'm like, the contract, once we get into contract, we're talking about 30 to 45 days. So, it's going to take a little bit longer. So I'm glad you put that out there.
Absolutely.
And, what's like the difference, so once they start the process with you, kind of what are some of the main documents that people need to gather for the application process?
Oh, that is a good question. Good question. Good question. You don't know how many people shred everything, or everything is just online and they don't have access. They just go about their business, So the documents you need to start gathering and holding on to throughout this process would be like your recent pay stubs, because you will always be providing current pay stubs throughout the process. You want to make sure you have copies of your W-2s. So the 2 previous years of W-2s. So we're in 2020, so you need 2018, 2019. You need a copy of your tax returns, most recent tax returns. Depending upon whether you use a program or not, you may need 3 years tax returns, but I like to look at the most recent year tax returns. And your bank statements, 2 months of your bank statements, and you have to make sure that you have your official bank statements. A lot of people like to pull up printouts because that's how they view it when they're viewing their account, but that's not acceptable with us in the beginning. So we need official bank statements. So if that bank statement has 7 pages, please send me all 7 pages, not just the ones you think I should have. Because I'm like, no, I need them. And do not alter your bank statements. Yes, I need to see your account number. Yes, I need to see those transactions. So, we need the official documents. Remember, you're going through a process where you're asking for someone to give you a huge sum of money to purchase a house. So, yes, they're going to ask for a lot of stuff, but it's all worth it in the end. It's worth it.
How does that work? Because I know some of the things that we bump up against with online banking, and people, you get credits if you do online banking versus getting paper statements.
Yeah.
So how does that work? Can they print the online statement, or no? Do they have to ask the bank to send them?
You can, no, online, I do online banking all the time, but if there's a button that says to see your official statement. So your official statement, every bank should have an official statement. It's online. You're just not getting it in the mail. So it's there online. You just click on that, save that to your computer as a PDF, and then you're able to email it, upload to our secure site, and you have your official statement. Gotcha. Later on, if we're in between statements, that's when we will get the printout. But we have your official bank statement first, and then the printout is done like towards the end, because we may need to verify like your earnest money deposit, had cleared your account, for example, and your official statement's not ready yet. So that's when we will use the printout. But it's there, So the online banking is great. We're saving, trees for not printing too much. But we want to make sure that we have the official bank statements, and you can't alter them. So, and make sure you have your pay stubs handy. Go online. Every employer generally has an automated system. Just know how to go in there, log in, and pull up those pay stubs.
Yes. A lot of people run into issues with that as well, too.
Yes.
Especially if they're paid through I guess the corporation that pays it is not the same name as the company that they work for.
Yeah, well, sometimes it's on the pay stub, so it's there. They just have to figure out they log in. A lot of people just go about their business. They see what their net income is, and it goes into their bank account, and they really don't look at what was taken out. But you need to evaluate your pay stubs. Sometimes something may pop out there that shouldn't be out there. So you want to make sure you look at your pay stubs. But during this process, it's important that we have your pay stubs. Okay. And I need to see the information, your gross, your overtime. I need to see your year-to-date earnings. I need to see all that stuff. So that helps us make the right decisions as far as calculating your income properly, because we want to make sure you can afford what you're trying to buy.
Indeed.
Yes.
So once you've collected all of these documents, do they need anything else for you to issue them a letter saying that they're ready to go out and look for a property?
Generally, that's it. The main thing is the income and asset documents because I need to know what your income is, and I also need to know your source of funds that you may need, and combine that with any programs that you may be eligible for.
Okay.
So those are basically the documents you need. There may be some other documents we may need later on in the process, but just to get the pre-approval moving, that's what we will need.
Gotcha.
We don't
Now,
want any surprises. No, we
indeed.
don't.
Indeed. So is there like a difference between like a pre-qualification and a pre-approval letter?
Absolutely, it is there because pre-qualification is just me running numbers and say you tell me your income is $2,000 and your debt is $500, and I tell you you only can afford $1,000 total. It
Mm,
doesn't evaluate the underwriting process in regards to evaluating the credit. A pre-qualification is like, okay, this is your debt, this is your income, this is what you probably can afford. Although some letters, pre-approval letters, I call them pre-approval letters, but some lender letters will say pre-qualification because the loan officer is not able to actually give an underwriting decision. So their
mhm.
pre-qualification, if their pre-qualification letter states that it has evaluated your credit, it has evaluated your income, then that's good in regards to moving forward to purchasing a house. A pre-approval is when it's actually kind of like been underwritten some kind of way through an underwriting system or even through an underwriter where they actually can make a credit decision,
Gotcha.
and then you verify everything later on in the process. But those are two tools that you can use when you as an agent want to go out and let them find houses. So it's
Mhm,
about the verbiage in the letter that's saying that if
mhm.
they evaluated your credit
Gotcha.
and they evaluated your income, because we just
Mhm.
don't want to look at one part and not the whole part, and then you guys go out and find a house and the person actually can't afford it because something was not evaluated up front
Right.
you know so
Right.
it's about the verbiage in there because I've seen all versions of pre-quals and pre-approvals, but pre-approval is generally when someone actually evaluates the credit
Mhm.
um, on the underwriting side, either through automated underwriting when people hear about the DU or LP, that kind of stuff, that mortgage language. We
Yeah.
actually the system is to say, yes, you can do it. As long as you provide me with A, B, and C.
Yes,
So we
yes.
rely on those tools a lot.
So you'll issue that letter, give it to the agent or give it to the buyer, the potential
Hmm.
buyer who'll
Yep.
provide it to their agent so they can go out and then start shopping because they know kind of what their range is.
Exactly.
And
Exactly.
people push up against this, but you do have to run their credit correct.
Yes, we have to
Mhm.
run credit. I have people going like, "Is it a soft pull? Is it a hard pull?" Oh, excuse me. I don't know why my allergies is kicking in. Um, but we have to run credit. Okay, we have to be able
Mhm.
to make that decision. If we're running your information through the automated underwriting systems, they have to have that credit report, and so it is an inquiry. The good news is that the consumer is allowed to shop mortgages that they want in a certain time frame up to like maybe 30 days where it shouldn't affect their credit score. So when I
Mhm.
talk to clients, I don't always run credit right away, particularly if they have some challenges with their credit. I don't want to run your credit just to run your credit.
Right.
Okay, we have a lot of tools out here with Credit Wise, Credit Karma, and everybody else can look at your credit, for free, and as opposed to you actually having a hard inquiry. When
Mhm.
you're ready, then we'll start that process. But we need to, run the credit in order to get a true picture of what your credit looks like. Because there's a lot of stuff on that credit that we have to address.
Mhm.
And, those disputes, if you want me to jump into that. Woo! When people
Just
are fixing credit. Yeah.
oh, okay. So you want to say a little bit about that or no?
Sure. So
Yeah.
when you're dealing with credit repair companies, okay,
Mhm.
make sure the purpose of you thinking that you're repairing your credit is because you're trying to probably purchase a house. I
Mhm.
mean, a lot of it's going on out here. A lot of advertisers, a lot of companies says we do credit repair. But the key is making sure your credit repair person knows exactly what is required to obtain the mortgage. And that's where I've
Mhm.
been finding a lot of hiccups and challenges when people have paid money for credit repairs. And I'm not hating on credit repair people. I just want people to understand how it kind of like works or how it will affect you applying for a mortgage. And so when you go in and they dispute everything on your credit report, which they shouldn't, Now, disputes are things that should be items that you know that the information is inaccurate or is not yours. If it's your debt, you know that you didn't pay that bill 5 years ago. Sometimes it's best just to leave it alone. Okay. So when you're getting into disputes, underwriting says disputes is not giving us a true picture of what your credit score is. Because when you dispute an item and the credit score module jumps in, it's not calculating that particular item in your score. So you're giving underwriting a false pretense of what your credit score actually is. So we don't like disputes. So disputes have to be removed off of your credit report. And then what happens, sometimes when you're messing with accounts, your scores may drop. And so you got to be careful. The only thing that I was allowed or probably suggest of disputing would be medical collections. Okay. We know those medical collections hit us all the time where we don't pay that co-pay that says we're supposed to pay that $20, $100, or whatever it is, that difference is. That will affect your score because there's a new collection that hit your account and it will drop it down. But that's an item that you actually can dispute because in the mortgage world, we don't necessarily consider medical collections. But anything else, you got to watch those disputes. Okay.
I had a question. So if you're doing credit repair or you have disputes, like how long before you start the process should those disputes be? Do they need to be resolved before you start going into this process, for home purchase or?
Yes. Yeah. So I would say that if you're trying to, and we talked about that 90-day window, 60-day window. So prior to that, because remember when you dispute the item on a credit report, the law requires that they respond to you within 30 days of some type of resolution. So the resolution, hopefully we want it to be removed completely because we're saying this is not me, this is not right, or what have you. Right. But if it's yours and they validate the dispute, they said the dispute has been resolved, leave it at that. Do not add another comment on saying customer disagrees. Because if consumer disagrees, that tells us that you're still in dispute. Okay. And now I got to get you to figure out a way to go back to your credit repair person to remove those comments off of there, which is then going to delay your time frame again. Gotcha. So it's you got to be careful about, if it's resolved, it is resolved. And keep in mind, if items happened to you years ago, we do allow you to write a letter explanation of what happened to you because everybody has gone through some challenges with credit and income, in life. Nothing's perfect. So we allow you to say what happened to you during that period of time. What we're looking for is have you reestablish yourself. Right. You had the hiccups in life. Now, are you back on track? Are you financially stable? Are you able to manage your current bills? Have you reestablished your credit? Can you show us that now you're back on track? So those are the things that we're going to look for. So sometimes the stuff that is old, let it be old. Let it be old. Yeah. Let it be old. Yeah. Don't bring it back alive. Yeah. Because when you start messing with it, it brings it back alive, and then you will never see your credit scores going up the way you need them to go up. But most importantly, make sure you're paying your bills on time. Because one thing is for sure, credit scores. Basically, the highest percentage is your payment history. About 35% is your payment history. So if you miss a payment, your score is going to drop a whole lot. Even that one payment can mess you up. Like you may have forgotten. And sometimes it's best to set up automatic payments when you're making online. Just to make
I was just thinking that. Set up that automatic payment and let it go. Even if it's the minimum, set up that auto and let it roll.
That's what I say. Set up the minimum automatically, and then you can always add more to it based on what you're trying to accomplish. But the credit payment history is so important. You got to do, and your utilization is important. So do not have high credit card balances close to those limits because you'll never see your score goes up. Everybody pretty much know the rule of 30% of revolving credit card utilization. Sometimes it's even better to get down to 10%. Yeah. But you want to be smart about using your credit. All right. Yeah. So don't live off of credit.
Yeah. So the lender is looking at all of those things. So they're looking at your income. They're looking at what you did last year. They're looking at the more recent stuff versus the old stuff because you can write a letter about that. Yeah. Right. And all of those things factor into, giving you the loan. So what types of loans does Meridian Bank offer?
That's an awesome question. That's one of the things that I love about Meridian Bank is the fact that We pretty much participate in all kinds of mortgage products. Okay, so from the conventional, the FHA, the USDA, the VA, there's programs. So those are your mortgage products, and then you match programs to the product. So a lot of people think, what's the down payment assistance program? Well, that's a program that's married to a mortgage product. So the first things first is, what can you be approved for as far as a mortgage product? Okay. Even like FHA 203Ks, home style renovation loans, we do all those type of loans. So that's why I love that we participate in a lot of all the mortgage products, and we do participate in a majority of mortgage programs.
Okay.
So most of the time when I'm talking to people, I need to figure out what their goals are and see whether they fit into a program to marry with the product. Now, your programs are your down payment assistance programs, whether it's state, county, city, or just a grant that's floating around that could be applied. And there's a number of those. So because they all have their special requirements, when we interview you, I then will choose and say, okay, you fit into this bucket, or you fit into that bucket. So it's very difficult for me to spill out programs to you because you may not apply for it. So the best part is when we interview you, we know where you're trying to move. We know what your household income is, because a lot of the programs are based on household income, not the borrower's income. So you can have husband and wife where the wife is the only person on the loan, but the husband's income is calculated towards the program household income, which can, disqualify somebody from using that program. So there's a lot of details that's involved with it, but we participate in a number of products and programs, which I'm very proud to say. I've been with Meridian Bank probably 6 years. Yeah, I've been here for 6 years, and I feel like I'm at home. But I used to have my own mortgage company. So I have a great team. I have underwriting, processing, assistance. We have a great team. We get a lot of deals done. We find reasons to approve the loan versus declining the loan. Like, how can I make this work? And I love that environment that we have at Meridian Bank. So we're pretty good at that. Yeah.
So, what are some of the guidelines that you'd use to determine if a person, which product they should use? Like if they should do FHA, conventional, VA.
So, a lot of people, okay, so conventional probably, and that's your Fannie Mae, Freddie Mac, okay, type of products. Most of the time, and they will advertise that they go down to 620 credit scores, okay? Very rarely you'll get approval at 620 credit score if you're putting minimum down. Most of the time, you want to have your scores that go up a little bit towards the 680 and above when you're dealing with conventional financing. So most of the time, you can put 3% down, depending upon what your income is. Generally, you'll have discounted mortgage insurance as well with conventional, depending upon what your income is. And that's like your home ready or home possible products, which is good products. FHA, most time FHA tells you you can go down to 580, but I can tell you that if you're trying to marry an FHA product with a program, you're going to probably need a higher score, maybe 620 and above. Okay. Especially if you're using assistance. And we pretty much participate in all that stuff. So I'll be able to say, hey, if I can get your score up, now keep in mind, let me just backtrack a little bit. Keep in mind your credit score does have an effect regarding your interest rate. So if I see a person's credit score, they're teetering between, let's say, a 639, I will probably try to give a suggestion of how to get the score a little higher so that your rate can be a little bit more favorable. Because credit scores is one of the variables that go into quoting interest rates as well. Okay. And then you have limitations probably on debt to income ratio based on products. Okay. So depending upon FHA, we used to go up to about 57% on FHA product, believe it or not. But since COVID-19 has happened, these are some of the restrictions that we're facing. Okay. So hopefully they'll go back to that. But you can have a high debt ratio to get a loan approved. Most of the time, conventional, your debt to income ratio will probably be around 49% or less, depending upon what your credit score is. So COVID-19 has put some restrictions. So credit score requirements have now increased a little bit, and debt to income ratio has decreased. And they're now requiring sometimes reserves. particularly if you don't have a rental payment history verification. So say you live at home, you rent free, live free, okay, with your parents or what have you.
Right.
They put limitations on people right now regarding that, in regards to, well, if you rent free, we require you to have like 3 months reserves. So the underwriting guidelines are ever changing. So you're never going to know all the answers as quickly as you want to know the answer, because we're always looking at updates and emails that pop up. Oh Lord, they done changed this. Okay, I gotta pay attention to that. So
Yes. The
so we'll be
guidelines are
back to normal,
always
hopefully.
changing. That's so true.
Yes.
Yeah.
But
Yeah.
the key is, listen, pay your bills on time. Make sure you have stability in your income. Continue to save money if you can, and we will fit you into some product or program. And trust and believe, we'll get you there.
Indeed. Indeed. Explain what a reserve is for people who don't know.
Okay, so reserves mean that, so if you're buying a house and say that your mortgage payment is $1,000, that's what your estimated mortgage payment is. That's including real estate taxes, homeowners insurance, mortgage insurance, principal and interest. Okay, so we want to make sure that you have, excuse me, we want to make sure that you have at least 3 of those payments left over in the bank after you spend the money that you need for down payment and closing. We don't actually give us the money. We just want to see that you have that left over. Once we say you need $8,000 for closing, but you have $11,000 left in the bank because they gave me that 3 extra months of the payment. So 3 payments left in the bank. It could be towards your 401k. It can be into a savings account, your checking account, but we want to see reserves. So everybody really should have reserves. Be honest with you, because I tell my customers, I don't want you going in house poor, because when you move, we know that's a whole nother ball game and regarding moving, the expenses it is, So do not try to use all your money to buy a house, but you should have reserves, because we never knew that this COVID would happen and people lost income at a snap of it just happens. And you want to make sure you have money, because people will face challenges throughout their life, and you want to make sure you're able to still pay your mortgage on time. I mean, there's programs that help, but don't wipe yourself out. Always have money left in the bank. Should always be having that.
Yeah, that
That's
was one
something
of the
that
things
I
we were
believe.
talking about with the savings part is, during this period of COVID, people are saving money because they're not driving. There are certain things that they're not
Yes.
doing. So don't just, squander that money.
Yeah.
Take it and put it aside, because, we're in the
That's right. Put
community
it
season.
aside. I
Yeah.
saved a lot of money sitting at home.
Yeah, you do.
Gas, eating out. I'm like,
Yeah.
I'm getting used to this.
Yes,
But yeah,
yes.
save it. Save the
Save it.
money. Yes, you got to
Mhm.
save money. And people learn how to budget as well
Yeah.
when their income has dropped.
Yeah.
So a lot of people who were able to collect unemployment, they're not bringing home the same amount. Now you learn how to adjust those numbers. I
Right.
tell people that a lot of my buyers, because I invest in my buyers, like I really want you to be successful in home ownership. So I tell them, if you say you can afford $1,000 a month, and I say to you, start putting it to the side right now. Let's see how can you really save it. Because we qualify you based on your gross income. You need to qualify yourself on your net, what you bring home, because we have no idea what your lifestyle is. You might be one who don't like to cook. You might be, you can like to shop or whatever it may be. But if you say you say you can pay $1,000 a month, then you should start putting $1,000 a month into your savings account and don't touch it. Whether it's a year from now that you want to buy a house or 6 months from now, practice that now so you can get used to that budgeting and adjusting your spending habits.
Yeah, or even the difference if you're paying $800 a month now, and
Yes.
your new payment is going to be 1,000 or 1,200.
Yes.
Save that 200 and just put it away. That can be your down payment, or
Absolutely.
help towards your closing costs. And it also, shows lenders that you're responsible and you can make that payment jump, do that payment shock for sure.
Absolutely.
Yeah.
One of the things that we talked about, well, with one of the campaigns with NAREB about house in the car. Please, please, please do not buy that car first. Get the house, please. I beg you.
That car debt will kick your booty.
You'll kick your booty big time, and you think I can afford it. No, you can't. And you're disappointed. You're scrambling around. I have a personal experience about that. When I first bought my house at the age of 22, I think I was 22. And I shared time with rent. I tell people, if you rent, you can buy. If you can rent a neighborhood, you can buy in that neighborhood. So I moved out at the age of 21, thinking I was grown. And
Okay.
and from that point, I spent, and at that time it was $395 a month in rent. Well, that's a lot of money back then, okay?
Wow.
And I spent 1 year, and I asked my mom, "Can I come home so I can buy a house?" So my mother said, "Okay." So I was trying to save money so I could buy a house. So anyway,
For
it
you.
came fast forward out here searching for a house because I was like,
Mhm.
I'm not giving nobody my money. I got to own real estate.
Mhm.
I found a house,
Good.
going through the mortgage process. They came back and said, well, your car payment is like, you can't afford it. Your debt to income ratio is too high. And I was like,
Wow.
what? Are you kidding me? But I can't so afford it. But mortgages are taking percentages of your income. So
Yeah.
I was like, good. So thank God my mother had the resources to pay off my car for me to be able to purchase my first house.
God bless.
And
Yeah.
that was a blessing in the sky. And my mortgage was $352 at the time, was less than what I paid in rent.
Mhm.
But
Mhm. Mhm.
um, if she had not paid off my car loan for me, that probably could have been, I may not have been a homeowner as soon as I wanted to be. And from there, I really started getting into real estate. Like that was the beginning of the process of buying a house at a certain amount and then experiencing your house appreciating.
Yeah.
Because the next year I did some painting when I moved in. I fixed the cabinets up and so forth. And the
Mhm.
next year it appraised for $22,000 more than what I bought it for. So then I
Hello.
learned about equity and building wealth. I was like, oh, this is it. So
Yes.
in the early age,
Talk
I
about it.
started
That's
doing
what's
that. Yes. But no car before the house. Okay. Get the house first. And
up. Yes.
then get your car.
Yes, that's the campaign that's going on right now with the National
Yes.
Association of Real Estate Brokers. House,
Yes.
then the car. We're really preaching that, especially to our young people, uh,
Yes.
especially to the young people. I
Yes.
know you got to get to work, but you don't need a $500 car note.
No, you don't. Save
You,
up that little bit of money and buy your little hoopty like we used to do with our first car.
yeah, get the hoopty, get the house.
But now
Then
they
you can
have
go back and
Uber.
get that car afterwards. Yeah, you
Right.
can
So
get it
it's better now because you have Uber.
Mhm.
So think of this. That Uber be your car note.
Yes.
And when you think about it,
Yeah.
so if you're in a situation, use Uber and Lyft before you buy that car to get around. So
Yeah.
now you can get your house and then you get the car.
Yeah,
So
and
think
it's
about the
actually
amount of money.
cheaper. I had a
Yeah.
client who did that. They Ubered everywhere
Yes.
before they got
Yes.
convenient door-to-door service.
Exactly.
And they saved a lot of money, and they got the
Right.
house.
Right. You don't have to
Mm,
worry about car insurance and any of
no,
that. Uber
no.
it. There you go. That's the answer. Don't buy cars, you guys. Use your Uber.
We're not getting paid by Uber for this
No, we're
for
not.
this
We're
Uber
not.
or
We just
Lyft,
want
right?
we just want
Yeah,
you to buy a house and build wealth.
yeah,
Something that appreciates. Real estate appreciates.
yes, real estate.
Cars depreciate. That's
Yes,
what
it
we want you to
does.
do. We want to get you into that home. We want to get you the
Yes,
first home, the second home, and keep it moving.
yes, yes. So, like, once someone is under contract, they brought you the documents, you've evaluated that they can, in fact, get that letter of that says they're okay to purchase.
Right.
Now, how long should it take in the loan process before you get to settlement?
Yes, so that's good. I like that. So what happens is now that you have that executed agreement sale, went out with Clara, she done found you your house. Okay, yes.
Mhm.
And now you have your executed agreement sale. This is
Yeah.
it. Now we're going to take the formal application. Now this is where the real deal is. This is stuff that's going to be sent to underwriting. So there's documents you're going to sign, your application. There's going to be tons of disclosures. Thank God a lot of that stuff is online that you can e-sign it. Uh,
Yes, yes.
so once we do that, you're given the consent, your intent to proceed. That's when everything comes back. Updated documents I will be requiring. Those updated pay stubs that I talked about, they always keep them handy, and also updated bank statements. All right.
Mhm.
We will start the process from there. I will take the application, then it's going to pass on to our opening and processing. So from processing, they're gathering information, they're doing their quality control, trust and believe, do not change jobs through this process because we're doing verification of employment. We're making sure your assets and bank statements are looked at. We're looking at everything. We want to make sure there's behind the scenes stuff that happens that most buyers don't realize is happening.
Yeah.
So if you're trying to omit information from me, trust and believe, we're going to figure it out. We're going to find out. So you want to let me know everything that's there. So that process from your application to processing to underwriting, because the underwriter is the judge. Think of it this way. I'm your lawyer as a loan officer. The underwriter is your judge. It's my job to present your case to the judge, the underwriter, for them to make a decision to approve you.
I like that.
Okay? Think of that. So when I'm asking for documentation, I'm gathering together my processor now. We're gathering information. We're packing it up nice and sweet. So when the underwriter looks at your file, because remember, underwriter's job is they look at files all day long. They don't have a relationship because we don't build a relationship. I know who your kids are. I know your goals. We know where you like to eat out. We don't build a relationship. An underwriter is just looking at paperwork. I know your personality a little bit. You know mine. I know your story. I have to make sure that underwriter hears that story, reads that story in that paperwork so they can say, yes, approve this loan. So that's the key of me asking you for documentation. So once the underwriter approves your loan, that's a commitment. So that could take anywhere, say, 2 weeks from the time we start the application to processing to underwrite before we get a commitment. It can take about 2 weeks, okay? And then once we issue the commitment, there may be some outstanding documents that we need, such as your appraisal, title, homeowner. These are the last little bit documents that we'll need in the process. So the process, and then we get to the closing table. So the closing table, you're happy. So most of the time, that will happen probably within 30 days. It depends whether we're using a program along with the process, where we may have to send documents to the program people for them to do their approval. And that could be with your counseling agencies and things of that nature that make sure they're fitting the guidelines for the program. So that sometimes can take a little longer, but we try to do that as quickly as possible. So I would tell you anyway between 30 to 40 days, getting you from beginning to end. And, once you go to settlement, you get those keys in your hand, and we're excited and we're jumping for joy that you made it to the finish line and now you're a homeowner. So it is a process. I would like to say and tell my customers all the time, you will have a headache. Yes. Information overload, headache. I don't know who to listen to. I want you to listen to your professionals, your real estate agent, your loan officer, all your family and friends who bought houses. They tell you, I didn't have to do that. I didn't have to provide that. Why they telling you got to do that? I need you to block those people, because everybody's situation is different. And as I mentioned before, guidelines change. Okay. So therefore, the process is very similar, but you are unique to your own loan. And just keep that in mind. All right. So listen to us as we guide you through this overwhelming but rejoiceful process, because you will feel awesome that you were able to accomplish buying this house. You will feel it's an awesome feeling.
It definitely is. But there are some things that could knock them out prior to getting to settlement. So what are some of those things that could, everything seems to be going fine, and then they get knocked out? The underwriter comes back and says, no.
Well, most of the time this happens. It's unbelievable that it happens, though. I'm like, do not change anything until you get the keys in your hand. One, do not buy this because we gave you a commitment. So we issue you a commitment. That's what you're saying. The approval is there, but we still have to get that final clear to close from the underwriter. So when everything else comes together, that's when some hiccups may happen. When we do that verification of employment and we call and they say, you no longer work there, do not quit your job in this process. 2, do not apply for any new credit. You cannot buy that car or get that furniture or those appliances that you wanted and you're excited about. You wait till after you get a house, because we are monitoring your credit. We're not repulling your report. However, there's some monitoring going on. So every time somebody inquires on your credit, we get a notification. So don't think that you can go out here because you got to approve and you have your commitment in hand and you're going to settlement in a week. And now you go out shopping. Do not do that. I can tell you how many people have went out and bought that car. And we got notification that they bought the car. And now you no longer qualify for the job. I mean, not for the job, for the house. So that's an issue. Taking your money, stop spending your money. Do not make crazy deposits. You know,
Oh,
that mattress money that we sometimes have,
yeah,
under the pillow, in between the mattress, in the drawer, whatever it is, and we deposit funds in there.
yeah,
And you think you can use that for money you need for closing?
yeah,
Because we can't source it. You cannot source cash.
yeah.
So these are different things that can, excuse me, can change the whole outcome of your process.
Yeah. So even like with reserves, because the reserves have to be sitting in your account a certain
Yeah,
period of time before they
right,
can't just automatically show up.
right.
Yeah.
Yep, it does. Sorry.
Oh, that's you're right.
It's on my throat.
Yeah.
Sorry about that.
Get some water. So yeah. So don't buy a car. Don't change jobs. Don't don't put the mattress money into the account because it doesn't count then. You gotta
Right.
do that sooner than 120 days before you start this process.
Right. Yes.
So it's already there when
It's already there.
that
Mhm.
first statement gets pulled, right?
Yeah.
Gotcha. So any other things that you can suggest to our listeners about uh, the loan process? This has really been eye-opening, the documents that they need to have in advance, that they should
Right.
start much sooner,
Yep.
how the guidelines that they need for the 3 different products for the FHA conventional, and the 203K and
Right.
the VA loan. And
Yep.
then what I learned was that you're matching the product, which are the FHA, VA, with the
Mm-hmm.
programs, which are the down payment assistance, the city,
Yep.
the county grant, all of
Yep.
those things. And you put those 2 together. And if you put them together, it's gonna take a little bit longer
Mm-hmm.
for the process.
Right. Depending
Happen.
upon what program it is, it may
Yeah,
take a
but
little longer.
mhm.
Um,
Anything
I just
else?
want to tell people, you can do this. It's
Yeah,
about preparation, educating yourself, and being committed and dedicated and disciplined
yeah,
that you can accomplish your dream of homeownership.
yeah,
Ask questions.
yeah,
Ask questions until you understand. If you're dealing with a loan officer or even a real estate agent that's rushing you and not answer your questions, I'm gonna tell you to run. Go
yeah,
somewhere else, okay? Because once you buy the home and you didn't get your questions answered and then things happen, you're not going to have a great experience of purchasing a house.
mhm,
This is a huge, huge, huge transaction. And I need you to ask a question so that you understand. Excuse me.
mhm,
So you can do it, but ask as many questions as you need to give you that comfort level and work with people who are interested in answering your questions and make you feel comfortable throughout this process.
yeah,
Keep your paperwork, pay your bills on time, keep your job, budget yourself, and let's see you as a new homeowner. It's
indeed,
it's possible. A lot of people can buy houses with minimum money, believe it or not.
mhm,
And if you can rent, you can buy.
indeed,
Yep. So
indeed.
you can do it.
Indeed. It
Absolutely.
is it is doable and possible. And it's very important, as you said earlier, for building wealth for the future because that property that you purchase now can appreciate over time.
Yes.
And it doesn't have to be your forever home. It has to be
Right.
your investment home. Think of it as an investment in yourself, your future, your legacy. Ms. Vaughn, please tell people how they can we don't have your phone number there, how they can contact you.
Okay.
Yeah,
Okay.
let
So
me
you
put it
can
in the chat. I can,
okay, you're gonna put it in chat, but
yeah,
okay, I'll announce it too as well. Thank you.
mhm,
So you can contact me at 302-293-8393. My
839.
email address
Okay.
is the letter K, Vaughn, V is in victory, AUGHN, at meridianmortgage.com.
Okay, let's see if I got this right. Kayvon at Meridian
Mortgage.
Mortgage.
Yes.
dot-
I'm having a attack over here.
Oh yeah,
I don't know what happened.
we're in that season. It's all good. So definitely reach out to Miss Kescha. She has all of the products, can do all of the down payment assistance. Can't do down payment assistance programs, match all that together to get you the most. And what I like about Kesha is that she'll put you in the product that's the best product for
Yeah,
you. Yeah.
absolutely.
based on your situation, because we all have a separate DNA. So I just want to thank you for joining us
Thank
today.
you
I want
for
to,
having me.
oh, and I
Thank you so
want,
much.
oh, you're
I
welcome. You're
appreciate it.
welcome.
Thank you.
Yes, and I want to thank all of the people who are watching us today, or if you're going to be watching us later on the replay, remember to like and share and subscribe to this video. We definitely want to make sure that you have the resources, information, and tips to impact your bottom line. This is great information. It's Home Ownership Month. It is definitely the time to start thinking about, if you haven't already, what you need to do to invest in real estate. So we hope that you learned something today that's
Yeah.
of value to you that you can use to get to those next steps. As always, want to send love and light and definitely prayers out to anyone who is impacted by this pandemic. If you've lost a loved one, if you are experiencing the effects of the physical distancing, if you have someone in the hospital that you can't see or be with, we send love and light out to you, and especially to our essential workers, the people who work in the hospitals, the healthcare, transportation, food, police, and most definitely our leadership. I just want to encourage everyone, take care of yourself, take care of your family, and stay safe. My name is Clara Lyons-DeVaughn. Financial Fridays, we stream every Friday on Facebook and YouTube at 9:30 a.m. You can join us. Until then, just keep living your best life. Thank you so much. Thank you, Ms.
Yeah.
Vaughn.
Thank you. Take care.